Crude oil is moving higher on the news by about 2.5%. Traders had been expecting this news for weeks. The Biden administration responding to rising gasoline prices across the country as the national average sits around $3.40 a gallon, according to AAA. Some high-tax states like California are seeing gas prices pushing $5 a gallon. States along the coast, like Texas, that are close to the refineries, are a little bit lower and still edging up towards the $3 mark. And after the pandemic-induced commodity collapse, spot prices are higher still across the board. Crude oil and Brent both up 60% this year, while natural gas prices have nearly doubled. Joining me now is Deputy Secretary of Energy David Turk. Welcome, and thank you so much for joining me today.
Well, thank you, Kelly. It's a pleasure to be with you.
Where to begin? I understand the frustration about high gasoline prices. Is there anything more the administration can do? Because this release, judging by today's price action, is already priced in. So in other words, it doesn't seem like gasoline prices are going to fall much from here.
Well, I think you have to consider the fact, just as you were saying, Kelly, in the intro piece, that the markets have already reacted in anticipation of us and, of course, other countries as well, in parallel fashion, releasing stocks. And so that's a significant data point here. And what we've now got is tools, both an exchange and a sale, to use over the coming months in order to do what we can from the U.S. side to help protect consumers. And that is really what the president is really focused on here, is lowering that gasoline at the pump.
It is nice to see the U.S. working with other nations to coordinate this release. Some are jokingly calling it the anti-OPEC, but could this be the beginning of an effort to work more closely going forward on oil supplies, especially if it can help lower the price?
Well, there's a lot of shared interest here, of course, right? High oil prices, high gas at the pump prices impacts not only consumers here in the U.S., it impacts consumers in the countries that we're working with on this. So there's certainly some shared interests along these lines. And what we've seen is an incredibly dynamic oil market coming out of COVID. Prices were really low and even negative, if you remember, there for a little while. And now prices are high. And right now we've got demand increasing and supply not keeping up with it. So we're trying to do what we can, including with this release, but not solely this release, as a tool in the tool belt to be helpful in that context.
And we're about to speak with, some analysts on Wall Street, but a lot of them think demand will outstrip supply for some time and could push prices quite considerably higher from here. What other tools are under consideration? Is banning exports one of them?
Well, let me get into at least what our independent analysts at our Energy Information Agency look going into 2022. What they see is supply catching up to demand in 2022, to the point where they forecasted that the oil price would be down to about $62 per barrel by the end of 2022, so
Sure.
a year from now.
Yeah.
So what we've got is a backward dated market, and that's why the tool that we've chosen, one of the two tools, this exchange, allows us to shave off the top part of that price curve, protecting U.S. consumers, protecting consumers around the world, because there's the backward dated market. So that's why we chose the tool that we did on this, the exchange in particular.
The real question is how higher price is going to spike in the next couple of months before they fall back. And you're right, absolutely, people are more sanguine about prices going lower into next year. But we're in the high 70s now. We could hit maybe 80, 90, 100. Who knows, right? It depends on so many different factors, including what's going on with global natural gas prices. And even as we're looking to this small effort to try to affect gasoline prices, consumers are about to get sticker shock on their heating bills this winter. I mean, you guys are really up against a challenge. What are you going to do about that and those who say all of this is because the Biden administration is unfriendly to fossil fuels?
So let's first look at oil. Oil and natural gas markets are interrelated to a certain extent, but they're also quite distinct as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.